So, are you wondering when home prices are finally going to drop? Well, in today's video, we're going to find out. Okay, so this is from Wolf Street, written by Wolf Richter. He's an analyst that I follow. He's really kind of a housing bear. He's kind of a bear in general, but he's very good at connecting the dots and seeing things ahead of the curve, which is why I follow him. U.S. home prices to drop 6.6% by May 2021, which is the first annual decline predicted since January 2012. And this is by CoreLogic, who owns the Case-Shiller Index. So Wolf Richter picked up on this story, and he notes that after years of being bullish about home prices, CoreLogic suddenly turned bearish. And it recently forecast that prices of single-family houses, including distressed sales, would begin dropping on a month-to-month basis with the June reading. It just released its May reading. It was up 4.8% year over year, but they're predicting that prices, as tracked by their National Home Price Index, would be down 6.6% year over year by May 2021. And May 2021 will mark the first year in which prices are expected to decline in more than 9 years, they said. So this is really a big deal. The recent surge in pending home sales and purchase mortgage applications to levels above June last year has been supported by record low mortgage rates, and that has continued to exceed expectations despite the severe recession that we find ourselves in. But it's been driven by pent-up buyer demand, and of course that's after people were locked down for a couple of months in the spring. But by the end of summer, under pressure from the unemployment crisis, which still hangs with us, buying is expected to slacken, and we are expecting home prices to show declines in metro areas that especially have been hit hard by the recession. 125 metro areas have at least a 75% probability of price decline by next May. So this chart below from CoreLogic shows two data sets. One is the Case-Shiller Index, and it's forecast through May 2021, which is the columns, and the CoreLogic HPI, which is the price index, black line, and then the HPI forecast through May 2021 is the light blue line, which you see at the very end here. The Case-Shiller Index, which does not include distressed sales, sees disappearing gains in 2021, so down here, but no actual price declines. However, the Home Price Index forecast, which does include distressed sales, sees a fairly steep decline, roughly in parallel with the first segment of the year-over-year price declines during the housing bust. So they're comparing this to this right here. The forecasted decline in home prices will largely be due to elevated unemployment rates, according to the CoreLogic, and the recent spike in COVID-19. And what's interesting is that Wolf has been on CoreLogic's email list for years. And what stood out to him were the unwaveringly bullish forecasts of its home price index that turned out to be more or less accurate these past many years. But now that they're suddenly turning bearish is quite something, and definitely something to be noted. So going over to CoreLogic's website itself, they have this really interesting article about the whole situation, and I'll link to it down below. But if you scroll down, they list out markets to watch. So while national home prices remain steady, the pandemic has created a volatile landscape for local housing markets. For example, in Philadelphia, they had an annual gain of 7.7% this May, compared to San Francisco, which only had 1.1% in May. And San Francisco is usually leading the pack in the nation in terms of price gains. So that's kind of a canary in the coal mine. The CoreLogic Market Risk Indicator, which is their monthly update of overall housing markets across the country, predicts that the following metro areas are at the greatest risk: above 60% probability of a decline in home prices over the next 12 months. So Prescott, Arizona, Lake Havasu, Arizona, Daphne, Fairhope, Foley, Alabama, and Naples and Crestview, Fort Walton Beach, Florida. So again, they note that the Arizona and Florida markets have that perfect storm of elevated COVID and subsequent collapse of their spring and summer tourism markets. And then harder hit areas may also experience a slower rebound. The preservation of factors like low mortgage rates and a shortage of for sale supply are supporting prices in some metros and may encourage price stabilization in some areas nationwide. The other area of this report to note is the market conditions indicator metro area maps, which they put together for you. So this is fantastic because at a glance, you can see which markets they consider to be overvalued, which are undervalued, and which are about normal. So red is overvalued, and if you click on them, you can see some of the specific markets they're talking about. Like, for example, I live in Washoe County here, it's overvalued. Some of these Central Valley and California markets are considered undervalued, while others in California, for example, are considered normal. 39% of metropolitan areas had an overvalued housing market in May of 2020, while 24% were undervalued and 37% were at value. So they're basically looking at income compared to house values to see how sustainable it is for most people to be able to buy a house in these areas. The MCI analysis defines an overvalued housing market as one in which the home prices are at least 10% higher than the long-term sustainable level, while an undervalued housing market is one in which the home prices are at least 10% below the sustainable level. So coupled with the HPI forecast, the CoreLogic MCI continues to show the disparity of home prices across metros. So for example, in overvalued markets like Las Vegas, where the local tourism economy also took a big hit due to COVID-19, home prices are expected to decline by 20.1% by May 2021. Let me just say that again. Las Vegas is expected to decline by 20.1% by May of next year. That's huge. Meanwhile, in San Diego, where the market conditions are considered normal, home prices are forecasted to decline just 1.3% over the next 12 months. So 6.6% average nationwide price decline expected by May of next year. And that goes as high as 20% in Las Vegas and as low as 1.1% in San Diego. And where your metro falls into this matrix is all in the CoreLogic premium reports, which you are free to purchase. And again, I will link to the article in the website here. So there you go. That's when home prices are predicted to fall. So if you have been waiting to buy a house and you want to get a better deal, you may want to wait for another year to see how prices fall out. That's it for this video. I hope it was helpful. Please don't forget to like and subscribe. I've done a whole bunch of videos about the housing market, and I'll link a couple of them here. Thanks for watching, and I'll see you next time. Let me know how you like this new format. It's more screen than me, so maybe y'all don't want to look at my face. Maybe y'all like this better. Yeah, we'll see.